Hello, everyone. Greyson here with SES Services. I like to take some topics from the financial media, go a little bit further into depth in a weekly market update. And today we're going to be talking about employment numbers. Okay, so we've got some pretty crazy economic times going on out there right now. Some of the normal relationships between market forces are out of whack. And last week was really no exception. We had some employment numbers coming out of the BLS. Bureau of Labor Statistics. And I mean, take a look. We've got the biggest delta between the number of payroll recipients and the number of people employed. Now, I know that sounds a little bit weird, but the Bureau has two different surveys that we're doing. And you see the establishment survey is the green line, and the household survey is the red line. So the household survey is simply how many people are employed, and the green line is how many people, how many recipients of payroll there are out there. So one person could have three jobs and obviously count for three on the green line. Well, the delta between these two numbers is at a new historical high. And when you see the number of people employed, it's really going nowhere. And we're going back, all the way to, well, take a look. December of 22 into 23, we're at the same numbers as far as people employed. Positions taken is obviously a lot higher, continues higher. That's people taking on second and third jobs. And when you think about the reports of how strong the economy and how strong the labor market is right now, when you look under the hood and you take a look at this, things look a little bit different. So we need to keep that in mind. Another thing we need to keep in mind when we're talking about employment and trying to look forward as to what does this mean to the economy and what does this mean to us as investors in these financial markets, keep in mind employment is a pretty trailing statistic. A lot of times the numbers that you see in the labor numbers are typically what happened in the economy some time ago. So it's not really a front runner, but it is one of the ongoing indicators. And the numbers last week were a big surprise. So you see a new all-time high in number of positions taken, and everybody got excited and thought, oh, maybe the Federal Reserve can't lower interest rates in the coming months. But when you look inside the numbers a little bit, it tells definitely a different picture. Another thing I want to point out to you is the native versus foreign-born workers, and this is going to be, if it's not already, this is going to be a big problem, in my opinion. You look at American-born workers, and there are no more jobs taken by American-born workers in the last 5 years. Straight sideways. These charts are courtesy of Zero Hedge, and it tells a different picture than what the financial media is telling you about a strong economy right now. So it is a concern when you see the foreign-born workers continuing to get more of the employment. And we know that a significant portion of these, if not most of these foreign-born workers, are not here legally. We've got a problem. The border issues, without a doubt, we've got a big problem right now, and we've got an election coming up in the fall, and I just fear that things will start to get a little bit crazy and some finger pointing is going to start going on. If the recession that everyone has been sitting around waiting for actually comes to pass. Now, again, when we're looking forward and trying to predict what the markets are going to do or how strong is the economy, should we stay fully invested, all these sorts of things. Again, employment numbers are typically a trailing statistic. But one of the things that came out last week, in addition to these labor numbers, the labor numbers looked great on the surface, not so great below the surface. But one of the things that is a serious concern is the credit numbers. Credit issuance to the consumer is, we got a negative print in April. And that hasn't happened much at all in the last, well, we're in the grand credit expansion across the world. In the last 6 years, we've had 5 credit declines, 5 monthly credit declines. And there was all of those a decline in the economy was followed. Not a big recession. I'm not predicting a big recession, but these numbers are starting to get more and more concerning, as you can see from the charts and credit numbers. People, the consumer, the American consumer that has held on so well since the COVID is really starting to reel some of the spending in. And I think everyone should take note of it. Stock market's at new all-time highs. Pretty weak volume at all-time highs, not looking super robust. Again, a very few number of companies leading the rise in the stock indexes. So a little bit of a concern. I'm not suggesting dump all your entire stock portfolio. I'm suggesting make sure you're managing your risk. And if you do have some assets that are invested in the market, that are invested in whatever asset that has some risk, and you know you're going to need this money within the next 2, 3, 4 years, maybe you're starting to retire, maybe you're going to go buy a new house or something like that, I think you need to make sure you're managing your risk. The buy everything rally in asset prices starting to look a little bit long in the tooth. Just getting a little bit concerned. I'd like to see some pullbacks. I'd like to see the economy backfill a little bit and consumers get back on stronger ground before I'm super bullish, especially with the markets. The market's already making new all-time highs, so you don't need to get excited and pile in after it. Hey, that's a quick update of the market from this week. If there's anything we can do to help, feel free to reach out to us. Smash that like button there on the channel. Subscribe to our channel. Feel free to reach out at any time, and we'll sit down and talk about your specific situation without any obligation. Thanks for spending time with us, and we will see you next time.